So there is a narrative, suggesting that the F&O trading is impacting the household savings. And I was looking at some RBI data, on the fund flow into financial assets and liabilities. This is for FY23. The share of equity trading is minuscule there. Even mutual fund is very high, FD and PF and the insurance part has a much higher share. Second, the financial liabilities have gone up, but that have gone up because of the housing or the home loan, not because of personal loan. So is it justified to link the fall in household saving to F&O trading?
No, we are not linking,
I'm saying there's a narrative in the market which is linked. Not
right. Some narrative is there in the market. So I think, would you like to take this question or would you like to deal with it? I'll supplement. Huh? Yeah, you can take it. I'll supplement.
So I would request that you look at household savings from a perspective which is a little different from here. As you rightly said, there doesn't seem to be much of exposure to equities in the household saving, in the composition of household saving. So what is actually happening is that there is a churn going on of the precautionary savings that were made during COVID. It rose to a financial savings was very high, with there are no avenues to spend. That is being drawn down to more normal levels. So one aspect of household saving is that. The other aspect is that there is a shift going on from financial saving to physical saving. People are buying more houses, etc. So physical saving is actually going up. If you take both of them together, then the total household savings has stabilized at around 20%. It was falling for quite a while, now it has stabilized. So all in all, I'm seeing return of normalcy in household saving behavior with these shifts.
Thank you, sir. Next, I'll request Mr. Ankur Mishra from ET Now to ask his question.
So continuing with the same question, you had mentioned earlier also that regarding specifically on F&O, the increased volume is something which you are watching from financial stability point of view. Now in today's policy statement also you have mentioned about the money moving towards the alternate investment avenues. SEBI has recently come out with consultation paper on F&O, whereby it aims to restrict the entry level kind of a retail participation who were losing money, and as per the SEBI data it is around 90%. So I want to ask, with the steps like these, will it help to the cause of the banks, which you are saying that the deposits needs to be garnered, there needs to be innovative ways, but will these steps help bank in garnering deposits?
You see, F&O, it's not as if, in F&O people are looking only at the margins. It's not as if the, entire savings amount is going into F&O. So that is something we have to remember. And on F&O, whatever views we had, we have already discussed with the SEBI the early warning group that we have among all the regulators. There is something called the early warning group. It has been discussed. We have put forth our viewpoints there. SEBI has taken note of our viewpoints. SEBI has made its own analysis, and any further steps based on the discussion paper and the inputs they get, SEBI will take appropriate action. So, and with regard to the bank deposits, and I think DG has already explained, you see, what the thrust of all that I am saying is that the mismatch or the divergence between bank deposits and bank credit growth, the divergence may create, let me put it this way, may create asset liability or liquidity issues, liquidity management issues. So I am only flagging this issue that because of this divergence in growth of deposits vis-a-vis growth of credit, it can potentially result in a liquidity management issue which the banks have to deal with. I am not by any chance suggesting that people should more deposits in the banks, not go for equity market. It is left to the people to decide. It's left for the investor, it is left for the saver to decide where he wants to put the money. All that I am saying is that the banks need to focus on this, mindful of this, because potentially it can create some structural challenges with regard to liquidity management. And one way of dealing with this situation is that the banks have the potential, the huge network of their branches which they need to capitalize and raise their deposit levels if they have to, if they are proposing to also sustain and support their credit growth. So it is more in the context of a structural challenge that may come up with regard to liquidity management.